want to get more insight on Deutsche Bank's motivation. For that, we're joined by Bill Fitzpatrick, financial industry analyst from Optique Capital Management. Bill, great to have you with us. We've been kicking around this afternoon, possibly why Deutsche Bank may be doing this. Is it a capital raise to meet new bank requirements by Basel III? Is it to make acquisitions? What do you think it's all about?
Yeah, hi, Carol. Thanks for having me on. I think there's a couple of factors in play here, but I would take it at face value, and I would assume for the most part that what they're doing is trying to take the capital concerns off the table. So maybe they're just grabbing the bull by the horn here, putting themselves in a position where there is no more capital concerns going forward. They're okay. They'll have met all the Basel requirements, and they'll also be in a good position to opportunistically pursue acquisitions in the event that those present themselves over the next several months.
Yeah, Bill, I've been talking with Steve Kroll here about this all day, and Steve, you're basically saying the same thing. It's not a distress call, really, even though it's a sizable offering. They're just really getting a jump on their competitors and recapitalizing as quickly as they can.
I would use the analysis that they want to be the J.P. Morgan of the U.S. and obviously a German bank. So, exactly. They want an insurance policy, and they just want to raise the capital. I think they're probably on some stress, but not enough, and they can raise it, so do it now.
Bill, is $11 billion a lot for a bank that's considered to be the gem of the European banks?
Third.
Yeah, it certainly is. It is much more than we would have anticipated. Shareholders were certainly not happy with the dilution. But I think this does speak to their competitive position, because while they're far better capitalized than their German peers, their real apples-to-apples competitors are those here in the U.S., who are sitting on far more capital than Deutsche Bank right now. So this levels the playing field for them.
Now, William, it's Dominic here. This idea of Deutsche Bank being that crown jewel, if you will, what does this mean about some of the other larger banks out there in Europe that aren't Deutsche Bank? We're talking about, of course, the Soc Gens of the world, the BNP Paribas, the Unicreditos, those out there. Does that say something about what their capitalizations are at those banks?
Well, there is a capital shortfall amongst those banks, but there is good news. It's not massive, number one. And number two, the capital requirements don't take place until 2013. So you will have some time to build up your capital levels through retained earnings. But they are going to, most likely, you're going to see some of these banks go tap the capital markets, but I don't know if they'll be massively dilutive.
Hey, William, it's Adam. Since, of course, Deutsche Bank and German banks in general kind of came to the rescue of Greece, does this in any way undermine Greece's ability to get itself out of the hole that it's in?
Yes.
No, I don't think so. I think that's reading into this far too much. I think I would reiterate my point earlier. This is an opportunistic position for Deutsche Bank, and I think if you're Greece, if you're some of the other distressed companies out there, I think you could do a lot worse than get support from the Deutsche Banks of the world.
Steve, let me ask you, does this put pressure on other European banks to come out and do their capital raises now? I mean, do they have to be the next guy out of the block?
Well, I think that you can grow through retained earnings, or you can raise capital. And I think while the equity markets generally have recovered off the lows, I would think there would be a rush to do it now, because I'm sure DB can do it, and the first 3 or 4 others should do it quickly. You never know what's going to happen.
Bill, do you agree that we see a number of other banks following suit here?
I think so. I think there's a lot of uncertainty out there. So while the equity markets haven't come roaring back, they're at levels where if you're going to do it now, why not? Only because that takes the risk off the table that we get a big sell-off here over the next several months, in which case it would be even more dilutive.
Bill, with Basel III over the weekend, what are you expecting to come out of those meetings?
I'll share a couple thoughts. The first thing, keep in mind, it would appear as though the requirements are going to be less stringent than what we originally thought, say 6 months ago. So that's the good news. The bad news is that generally speaking, the capital requirements are going to go up significantly. And if the banks are holding more capital, that's less they have to pay out to shareholders in the form of dividends, to make loans, to help stimulate our economy. So that is going to be a drag, but these are what I would call a necessary evil, the adjustments we're going to see on Sunday.
Hey, Bill, you say it's effectively less stringent, and that's the good news, but are you potentially just postponing the inevitable? In other words, they're doing a raise now, and because they weren't stringent enough, they might have to do a raise again in 6 months?
Referring to Deutsche Bank, no, I don't think so. I think if you look at their capital levels now, they are less than their U.S. peers, but they're teetering on what was considered well capitalized. So with $11 billion, they should be perfectly fine here, well above the 7% Tier 1 threshold that we're expecting to hear on Sunday. So it would shock me if you were to see Deutsche Bank go back to the market 6 months from now.
Bill, let me quickly ask you, all this talk about acquisitions and Deutsche Postbank, I mean, do you expect some M&A action to happen among European banks?
I would expect in the global banking industry, you're going to see M&A activity run rampant. And that's because it's two reasons. Number one, you're going to have growth is going to be restrained, so it's going to be difficult to generate organic growth. And the second reason is you have distressed sellers. You've destroyed a lot of franchise value amongst these smaller banks, and they're going to have a hard time making a go of it on their own. And if you put those two together, you get quite a bit of activity here over the next 6 to 12 months.
Hey,